Good morning, everyone. My name is Kirupa Pushparaj. I'm part of Square's legal team, and I'm pleased to be here to kickstart our week-long series of educational events as a resource for business owners like yourselves. COVID-19 continues to wreak havoc around the globe, causing unimaginable distress to both people's lives and the world's economy. As a result, businesses such as yourselves have to deal with strenuous and evolving financial, workforce, and operational issues that require you to understand the resources available to you on an ongoing basis to be able to cope and react both swiftly and strategically. To help you with that purpose, Square has teamed with our partner, Bench, which is America's largest professional bookkeeping service for small businesses, to lead you through this week of workshop sessions that will all be posted on the square.com website and available also on this YouTube channel. These sessions will help you get your finances in order, prepare for your eventual or even ongoing reopening, and get the best financial best practices that you need as a small business owner. And with that, let's get into today's session, which will focus heavily on loans and other disaster relief financial options and resources available to small businesses, especially. We'll primarily be talking about the PPP loans that has been a swirl of questions and concerns, especially for small business owners. We'll talk about how to apply for it, can you apply for it, how to use it, how to get forgiveness, and all of that nitty gritty. As a lawyer, I have to say this, all of these slides and information we put out is for your benefit, for educational purposes only, and for updated information and for all other questions, you should refer to the SBA's guidance available at their website. Thank you to everyone who submitted questions. We've taken all your questions into account and curated them here, and we'll get through all of them. And with that, I am excited to announce today's experts who are going to be talking about these topics. First off, we have Jackie Reeses, who, on top of being an inspirational leader at Square, is the head of Square Capital, the business unit that has made it possible for Square to extend loans to small business programs like yourselves through the PPP option. Next, we have Oscar Wimshurst, who is the head of partnerships at Bench and has also been the point person and the lead innovator for all pandemic COVID-related innovations happening at Bench and the programs that are offered to you. And so with that, let's get started. First off, Jackie, thank you again for being here. Let me start with you to have you present to our business owners what the PPP program is and an introduction to it.
Great. I'd be happy to. I'm going to talk a little bit about PPP, and I'll also give a little bit of background on Square Capital, but very brief. The purpose of PPP is to help small businesses recover from the global pandemic and the resulting forced closures of non-essential businesses around the United States. The program intends to fix the imbalance of revenue opportunities caused by closure and help make sure that small businesses can survive into the future. Now, why did Square get involved in this program that is being run by the SBA and created by Congress and the administration? Square's purpose is helping small businesses get access to the financial system. Our purpose is economic empowerment. Square Capital was started to provide access to credit and help unlock access for those that typically get unlocked from the financial system. The reason we decided to participate in PPP is rooted in the very nature of who we serve and making sure that they could get access to the PPP program and not get unlocked from the program because they did not have pre-existing lending relationships with a bank. At the very start of PPP, we heard from Square sellers that they were finding it incredibly challenging to get access to PPP funds. If you recall, in the first program, a lot of local banks took those that they had pre-existing lending relationships with, and many of them took those that were applying for very large loan amounts. And so Square acted very quickly to make sure that we could get PPP funds up and running to give access to Main Street sellers across the United States a chance to get access to the funds to help support their growth and survival during the most challenging of times. The financial lifeline of PPP is critical to small businesses, and we're committed to opening access to as many small businesses as possible. And so with the second round of funding that is being aimed towards small businesses, although anyone can apply, we are making sure that everyone can get served. And so we're working with the SBA, with Celtic Bank, one of our bank partners, and we're making sure that that funding is available. And so we're offering access to loans up to $2 million. And thus far, our average loan size is about $12,000, which shows that those who are the smallest businesses across the United States are able to get access to these funds. And hopefully we'll be able to get support through these unprecedented times. So we're going to continue to work with small businesses through this second round of PPP funding. And now that forgiveness guidance is coming out and there's potentially some adjustments to the law, we'll continue to help support our small business sellers through those adjustments.
Thank you. It's certainly heartening to hear that. With all the disaster stories of the first rounds and how all the funds were drained by conglomerates and large corporations, it's great to see Square and this program catered more towards the businesses that need it the most. So getting more into the detail, Jackie, we've heard about, again, small businesses being eligible to apply, but a constant question that people ask about and a concern is, hey, am I eligible to apply if I'm a sole proprietor, if I don't have a large workforce with me who I pay paychecks towards? So could you start us off with who was eligible to apply to the program and how it differs for a sole proprietor versus larger companies?
Sure. You raise a really good point. We've noticed in particular that non-employers have a misconception that they can't apply, but they absolutely can. So employers and non-employers, even if they don't think about their revenue as, quote, a paycheck, they certainly can apply, and we'll help explain how. Non-employers need to make sure that they apply with the IRS Form 1040 Schedule C. And typically what we're seeing is that population of non-employers thinks that they should submit a 1099-K, but they can't. It needs to be aggregated up to a 1040 Schedule C. And so in order to apply broadly, I'm going to step back now around eligibility. You have to meet certain requirements established by the SBA. You don't have to necessarily process payments with Square, but you do have to have a Square account, and you need to complete a few simple steps in order to apply immediately. First, you have to be in operation on February 15th, 2020. That's an SBA rule. Sole props with 0 employees, independent contractors, self-employed individuals, all of you are included, but you have to be in operation on February 15th, 2020. That's the date that the law is applicable to. Second, you have to be a small business with fewer than 500 employees. Again, sole props, independent contractors, self-employed people, private nonprofit organizations, 501c, 19 veterans organizations affected by coronavirus. It's also important to note, since sole props don't know that they could apply, as long as they have official tax docs or payroll docs to show that you have had payroll expenses, you're absolutely eligible for the loan.
All right. That's definitely helpful, and it certainly takes care of a number of questions we've received on that topic just around eligibility, which also shows that people are still waiting to and looking to apply for the program. So we'll touch on that a little more in a couple of slides. But before we get there, there's certainly a lot of acronyms floating around: PPP, EIDL, especially EIDL. So what is EIDL? And I've heard stories of, and even through the questions, we hear about merchants hearing about EIDLs, Economic Injury Disaster Relief Loans, I think, for the very first time. Is this new, and is it part of the COVID relief program, or has existed before? And how does that relate really to PPP? Jackie, again, if you could take that question on.
Yeah, so I'm going to get a little bit technical, and I encourage everyone to just listen generally and then go look at the guidelines, either on our site or what Bench is publishing, or on the SBA site. So long before coronavirus, the EIDL, again, Economic Injury Disaster Loan Program, was providing financial support to small businesses and private nonprofits that encounter certain disasters. And the CARES Act, which is what created PPP, expanded the EIDL program to make it easier for borrowers dealing with COVID-19 slowdown to get a loan. So here's how they connect. PPP ties into the EIDL program because businesses and organizations that received EIDLs between January 31st, 2020 and April 3rd, 2020 are given the option of refinancing their EIDL with PPP. I know that sounds really complicated. If the EIDL was used to cover payroll costs, the borrower must refinance the EIDL with the PPP. So we think EIDLs were part of the PPP to help sellers experiencing hardship take advantage of refinancing these loans at lower rates. So PPP loans are 1% loans, and EIDL loans are 3.75%. So I hope that explains how they connect to each other.
So if I have, or if I get approved for a PPP program, you're saying if I already have an EIDL in place, does it automatically get taken out of or refinanced? How does that work exactly in terms of mechanics?
So it will show up on your application as a individual line item where lenders will ask about your EIDL amount, and it will get taken out of your overall PPP loan. And so you will see that actually happen in the loan disbursement.
And the way I think about it, ultimately, that is a big benefit to merchants because you're taking a 3.75% loan and getting it essentially converted to a 1% loan with the possibility of loan forgiveness, which we'll talk about. So it is not a disaster. It's actually a good thing that's happening, right?
Yeah.
Okay, perfect. All right. So while a lot of merchants have indeed applied for the loan and have gotten the loan on PPP through programs like Squares, a lot of merchants are still concerned about whether they can still apply because some people thought they were sole proprietors and could not apply, and others haven't just had access to the program thanks to the disaster of the first round. So, Jackie, could you talk to us about whether it's too late to apply or people can still apply, and how that happens through the Square Capital platform?
The SBA is still open on PPP. And so Square Capital is still accepting and reviewing applications at this time as there is funding. The one thing I will say, however, is that this obviously changes day to day based on funding availability at the SBA. So on a daily basis, if you're interested, I would act quickly and make sure you apply so that you don't get in a situation where the funds run out while you're still debating availability and interest in the program. The SBA does in fact publish the amounts that they've funded, and so it's worth looking at the SBA site to look at that availability. The way to Oh,
Sorry,
go
Jackie.
on.
I was just going to say I had a peek this morning, and I think there's something like just shy of $150 billion still available
Yeah,
through the PPP.
absolutely. Absolutely. So there's still plenty of capital availability to apply. And the way to expedite an application is by filling out 2019 taxes and having that document available to upload in the application. If your forms aren't prepared, you want to pull official payroll reports from your payroll provider so that you're ready to upload them. And Square sellers can click on the Capital tab within their Square dashboard and apply. Or any small business can go to square.com PPP, create a Square account, and access the application.
Okay. So there's more information available, as Jackie mentioned, through Square Capital's website, which is a great resource for all information relating to how to apply for the program, what forms you need, as Jackie just said, even prepare tax returns without even having been filed. So please go there for more information. We'll make these slides available through at some point through this link, and also Bench's website also has more information. And again, disclaimer being what it is, the SBA website also has plenty of information for you on exact details. So switching gears a little from applying for loans, which is still, as Jackie and Oscar mentioned, in option and plenty of funds still available as of today. A lot of small business owners, such as yourselves, have indeed gotten loans and are concerned and curious about how to go through loan forgiveness, which is the next major topic. It still remains a little bit a topic of the Wild West because it seems like the laws are being refined on a practically everyday basis. But Jackie and Oscar are here to provide more information on the outlook, how to go about it, and what the nitty-gritty is in that regard. So again, Jackie, if we could get started slides, with the basics of loan forgiveness. How does a merchant, a small business owner, start thinking about loan forgiveness, and what kind of information can they start to prepare so they're ready to apply for when it's time to apply for the forgiveness?
Yeah, I'm going to make my comments and then I'm going to provide one huge caveat, which is the House is passing, or the House published a potential change to the law. We're waiting for the Senate to reconcile their version of an amendment. And so we will see the forgiveness guidance change likely within the next week or so. And so it's worth getting updated with the latest guidance from the SBA's website or from lenders' websites like ours. So let me give you the state of what exists today. A seller can apply for forgiveness 8 weeks after they receive loan funds. And before that time period, they can review and start collecting the documents that they're going to need in order to apply for forgiveness. And let me talk through categories of those documents. So payroll costs. You can get bank account statements or third-party payroll service provider reports. You need to pull tax forms for the covered period. This is one of those things that's likely to change. But you should pull IRS payroll tax filings and state quarterly business and employee wage reporting, unemployment insurance, tax filings. And then lastly, payment receipts, canceled checks, account statements, documenting employer contributions to employee health insurance and retirement plans. That's a mouthful, but it gives you a sense of the type of categories. And essentially it's for all full-time employees, documentation showing average full-time equivalent employees during the borrower's chosen reference period. And again, today it's 8 weeks. It's likely to change to 24 weeks, but stay tuned for the official updates to the law. And then non-payroll cost receipts, cancel checks, or any kind of account statements for things like business mortgages, business and rent, lease information, business utility information, invoices, again, all during that covered period. So I know that's super technical, but it's essentially saving your business documentation that proves your expenses during this particular period.
All right. So you touched on this a little already. Maybe the name of the program is a little misleading. It talks about paycheck protection, but it's not entirely about paychecks as to what you get loan forgiveness for. You talked about mortgages and other things. So could you throw some light on what are the things I could spend it for with an eye of getting forgiveness towards a loan amount, and what's not covered?
Okay, sure. So the most important eligible expense is payroll. To be eligible for full forgiveness, at least 75% of your loan needs to be spent on payroll. So here's another caveat. This might change in the next week with the updated law, and that percentage might actually get reduced. But please read and look at the SBA's website to get the latest guidance. We'll reflect it in our guidance also, but you should look at the official guidance from the SBA. And then owner compensation. So this is amount paid to owner, employees, sole props, self-employed individuals, general partners. That's included with the scope of payroll costs. However, it's capped at $15,385,000 per individual. And then the additional 25% of the loan can be spent on business rent, business utilities, business mortgage expense. However, those expenses have to be in place before February 15th, 2020. And then finally, my last point, loan proceeds spent on other types of expenses or that are outside the 8-week window after you receive the loan, as of today, appear to be ineligible for forgiveness at this time. But any amount that's not forgiven will need to be repaid within a 2-year loan term, and you'll pay 1% on that interest. So it's a low interest loan for the amounts that are not forgiven. So I know that's a mouthful, but it's really 3 buckets to think about: payroll costs, other business expenses, and then expenses outside the window that roll into a 1% loan.
Great. Oscar, from a bookkeeping perspective in how a business owner should think about it, what exactly would you consider, in addition to just payroll and all that, payroll costs? What categories you would assign to that?
Yeah, it's the kind of it's the hot phrase of the whole program, is this kind of idea of payroll costs, and it's actually a little bit more detailed than a lot of people think. Things that go into payroll costs is not kind of simply just the wages that you pay your employees. There's a lot of other things that go into it. So things like if there's any informal tips that they're collecting, you can absolutely include those and record those in the covered period and claim that as part of the cash compensation piece that your employees are receiving. On top of that, any money that's set aside for things like paid leave, whether that's medical leave that's not already covered by the CARES Act, and money that's kind of set aside for severance pay, things like that. Also, other employee benefits like health benefits, retirement benefits, all these sort of more holistic items that form the overall part of an employee's compensation should definitely be recorded, totaled up, and kind of used to kind of figure out exactly how much that you can apply for in terms of forgiveness. On the subject of taxes, these are also things that can be included into compensation. It's worth making the mental note that this is only state and local taxes assessed on employer compensation. So it's not sort of federal withholding tax or anything like that. So just include those things. There are specific lines on the sort of forgiveness form where it will remind you, here's where you put the sums for state and local taxes. Here's where you put sums for health insurance or whatever. But yeah, payroll costs is a big, all-encompassing term.
Yeah, definitely. There were a lot of questions from business owners since we especially see a lot of business owners who are service industry based, where tips form a good portion of their compensation. The question was around whether tips that are paid from the employer count towards payroll costs or just the paycheck program. So you touched on that briefly, but while I have you on the topic,
I'll certainly hammer it home. They are definitely eligible, and not only in the forgiveness part. If you're sort of still in the category, you haven't quite applied yet, and you're trying to figure out how much you're eligible for. Just a quick summary of that: you take your average monthly payroll cost and you multiply that by 2.5. But that average monthly payroll cost includes the whole gamut. It includes tips, it includes the state and payroll tax, it includes other compensation that you pay employees that's sort of non-monetary. So yeah, all included.
All right. That's good to know. All right. So again, going into the topic, just as you said, hammering it home, sole proprietors make a good percentage of the callers today, of small business owners. The concern, again, being there, can I use 100% of the loan towards paying myself towards the forgiveness?
So to echo Jackie's comment from earlier, as it stands, no. But these things are in constant flux. The terms of forgiveness and the period of the loan itself is kind of changing. How that's going to affect this whole idea of owner compensation replacement, we don't quite know yet. But I'll kind of let you know exactly kind of where things stand at the moment. And that is that as a general point, full stop, there's not as much in terms of guidance for non-employers as there is for employers. Even the application form for forgiveness itself is definitely geared up towards folks that have employees. But it is important, if you're a sole prop, it is important to know about this idea of the owner compensation replacement. And it all ties into how you applied for the PPP in the first place, which was through your 2019 net income. So this Schedule C form that Jackie was talking about earlier that forms part of your 1040 return. Now, the idea of owner compensation replacement is that when you come to forgiveness, 8 weeks worth of that 2019 net income. So you divide that amount, that 2019 net income amount you divide it by 52, multiply by 8, and you get your 8 weeks worth. That amount can be considered automatically forgiven for sole props. Caveat to mention, it is capped at $15,385 per person or per applicant. And that is a result of the PPP being that it covers an amount capped at $100,000 per person. And so that's basically the 8-week equivalent of that. If the way that the program looks like now, that kind of works out as roughly 75% of the loan, and any of the remainder of the amount, if you've got business expenses like mortgage interest or utilities or etc., definitely a good idea to maintain any records that you can over the 8 weeks to try and claim those as well. But you can't, as it stands, use the whole loan to pay yourself.
Okay. There were specific questions exactly around that. Can I use 100%? There's the question about 75% and 25%. Can I use my paycheck towards the entire 100%? And you definitely answered that question. So moving back to the mechanics of applying for this, like we said, it's still the Wild West territory. People haven't started applying in full earnest for forgiveness. How do merchants, small business owners start to think about it, and how can they apply, especially through Square, and prepare for that and apply for that through Square? Jackie, if you could take this topic on.
Sure. So for businesses who receive their PPP loans through Square Capital, we're creating an easy way for you to upload documents and calculate how much of your loan is eligible for forgiveness. This application won't be ready for at least a few weeks, but we will absolutely notify you as soon as it's available through both your email and your Square dashboard. You don't need to fill out any application on the SBA's website and submit it to us. We're going to try to make it easy, where section by section through each of these categories of forgiveness, we're going to enable a small business to upload the documents section by section and then show how forgiveness adds up to equal 100% to make the math of this program easy for everybody. So we'll have that application up ASAP and make sure sellers start to see guidance once this latest update to the law is passed in the next few days, so that we can make sure to give the latest and greatest to everybody.
Perfect. Jackie, as you say, the laws are still changing. It's in a bit of flux, and guidance might change. I'm doing the best as a business owner to gather these amounts for loan forgiveness. But what happens if the entire amount or a part of it is not indeed available for forgiveness? How do I respond, or what are my options at that point?
Yeah. So there are two ways that could happen. One, there could be an issue with the expenses that were deployed during the measurement period, or two, someone might have taken the loan out and to use it as a low interest loan. And so they didn't have the expectation of forgiveness. And then there's also obviously a blend of the two that could be applicable, where some of it's forgivable and some of it will be rolled forward into a loan. And so if you weren't approved for forgiveness, then you have to repay the loan plus a 1% fixed interest rate. So today the PPP loans are 2-year loans with an annual interest rate fixed at 1%. And the first payment isn't due until 7 months after your loan date. So your business has some breathing room up until that time.
Okay. So going by something you just mentioned, and it was kind of related to a couple of questions that came through, a little bit of a tongue-in-cheek question. Why wouldn't I just take a loan even if I don't intend to use it for paycheck programs or for other forgiveness aspects? It's a cheap loan available at 1%. Why wouldn't I just do that? What's a caution you would say, either Oscar or Jackie, tell people who are going that route?
Yeah, Karupa, we've had a lot of people come through, bench clients and otherwise, who've thought exactly the same thing, and we've just reminded them that we would really recommend against it. There are certain certifications you have to make on the form, which is obviously a legal document, that you're certifying you're going to use the funds for their intended purpose. And if it turns around and you've been using it just as like a working capital loan, you are opening yourself up for fraud. Obviously, we don't know exactly how the SBA is going to audit all these loans. That there's been various rumors of them automatically auditing over certain amounts, but you do have to keep your records for 6 years. So they're obviously going to take quite a long time to go through that audit process. So we don't recommend going down the route of just using it as a low interest loan. Fair
enough. Going again through the mechanics of loan forgiveness and related topics like tax, Oscar, so normally I have expenses that I deduct for my taxes as a regular tax deduction in my annual process. I'm using those expenses towards the PPP loan forgiveness now. Can I still claim those expenses? Feels a little like double dipping, but can I still use it towards my tax deductions next year and on, or how would that work?
Yeah, you hinted at the answer there, Karupa, and this kind of phrase "double dipping" is the key thing here. That it's unfortunately you can't claim forgiveness on these expenses that you're spending now and then deduct them from your tax return next year, because obviously the PPP funds you've received are already tax-free, and so that would constitute double dipping, and it isn't allowed, and that's been made clear by the SBA and the Treasury.
Still bears a little bit of caution out here. In along those lines of maybe creativity or maximizing my opportunity to get my loan forgiveness in, some people are talking about whether they could prepay their mortgages or other expenses like rents in advance during that window period to maximize loan forgiveness. What are your thoughts on that?
Again, unfortunately not. This is kind of it's kind of laid out in the guidance from the SBA that this can't happen. It shouldn't be for prepayment. I will touch on one kind of brief point, which is the idea of expenses. One kind of recent piece of guidance was that expenses, either payroll costs or otherwise, could be paid or incurred during the covered period. So if you have an obligation to pay a mortgage interest payment that you incurred in the covered period, but then the typical payment date is outside the covered period, as long as you stick to that payment schedule or bring it forwards, you can still claim that even though you didn't necessarily pay it within the covered period.
Okay. Yeah. I'm just hammering through a couple of those mechanics and questions in the nitty-gritty. Questions around mortgage interest itself. What exactly is covered under the loan forgiveness? What's defined as mortgage interest according to the statute here?
Yeah, the key first point to notice here that it's mortgage interest, not principal. So it's one thing that may kind of slip through the gaps. But it's essentially any interest paid on mortgage on property used for business purposes. That's an eligible expense that the PPP funds cover. And just a couple of examples. One is kind of slightly more obvious, which is, if you have a warehouse and you're paying mortgage interest and you use that warehouse to store business equipment, that counts. Then also a slightly less obvious example is that if you've got a car that you use for business deliveries or a van or something like that, and you're paying auto loan interest on that, that's also covered under this kind of broad bucket of mortgage interest payments.
Okay. I have to say, this has been very educational on just the PPP aspect. You've answered all the questions that have come in and then some. As a reminder, the information is available through this link, through the slides we will post, to the Square Capital website, and through Bench's website and the SBA's website for all the additional information you'll need. Thank you for the light on the PPP program itself. Since we have a little bit of time left, I'd love to use that time towards some of the other financial relief resources available to small businesses. And I think a major topic, switching gears from PPP, is tax relief by itself. The CARES Act brought about opportunities for additional tax relief that weren't available before. So, Oscar, while we're still talking about the CARES Act and programs available through it, could you talk a little bit about, sorry, I'm trying to change the slide. There we go. About what additional tax relief measures that are available for small business owners through the program?
Absolutely. And we've got a couple of slides here that are just rammed full of information because the CARES Act was huge and there was a swathe of tax changes that people can take advantage of. And to kind of go through it line by line would probably take up a bit too much time now. So I would recommend for everyone to check these slides out in your own time and work through some of those changes or talk to your CPA because they'll know all this information. I'll pick out a couple of things which I think are important. One is this idea of a deferment of payment of your employer payroll taxes. The reason I'm picking this one out is because it's kind of subject to change at the moment because the CARES Act allowed employers who are kind of typically going to pay payroll taxes to defer the payment and to split it up. So half would be due at the end of 2021 for 2020's payroll taxes. Then the other half wouldn't even be due until the end of 2022. Now, the caveat to that was that you couldn't qualify for that payroll tax deferment if you were also receiving PPP funds. And this is one of the things we expect to change this week as part of the sort of Paycheck Protection Program Flexibility Act, as it's being currently called. So do keep an eye on that because even if you got PPP funds, you may also be able to defer payroll taxes back a couple of years. And the other one thing I'll pull out is this idea of net operating losses, because this is going to affect folks who wanted to apply for the PPP, but they were reporting a loss on their 2019 Schedule C, and so they couldn't apply. What you can do is to kind of, what used to be the case is if you had a net operating loss, you could only carry that forwards and offset against any tax gains in kind of following years. What you can now do is take that loss and you can take it backwards up to 5 years and offset against any gains that you had up to 5 years ago. And if that suddenly now means that you qualify for a tax refund, you can claim that all at once, which can provide a great little cash injection to your business. But like I said, there's a bunch more other things on those two slides, so I would recommend just going and reading through when you get the chance.
Thank you. Again, in the interest of time, this program was primarily about PPP programs, but we also have some information included as part of the material about not just the tax relief, but also alternative financing measures available for small business owners, things that are outside of the PPP purview that you could avail of, especially things like the Express Bridge Loan Program and other employee retention tax credits. These are available through the government, and we've also included resources around non-government resources that are available for small businesses that you should also look into. These slides have this information. I'm breezing through these just because we are running short of time, but again, all of this information is available for you to look at, and I hope this has been helpful for small business owners, and we thank you for dialing in. Square will continue to have programs such as this as resources for you to be able to cope with the pandemic and other useful tips continuously. So check into our website for additional information and other programs coming up at square.com/events. And at this point, I'd love to extend a warm thanks again to our wonderful experts, Jackie and Oscar, for taking the time today to walk us through all of these details. Thank you. And
Thank you.
All right.
Awesome.